Bitcoin's the answer here. All of this, all equities, all the custody, all the bonds, all the credit, OTC derivatives, the whole lot should go on chain because there's a source of truth that is fundamentally required in the event of something going wrong.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul will talk about how blockchain technology is revolutionizing capital markets, lending and securitization by eliminating intermediaries, enabling real-time transparent transactions, and democratizing finance. Let's catch him up to know more.
And I think what's interesting is what you're talking about prime broking is banks' balance sheets are restricted because of Basel III and soon Basel IV. Their ability to lend or leverage their balance sheets in the way that is required to expand that has been one of the things that has restricted the hedge fund industry as well, because there's just not much available. But you went through something that I was involved in also in around early 2012, 13, 14, was this direct lending model. And that was the first glimpse. Family offices were lending directly to trade finance and stuff like that, and getting great rates of returns, and there was no intermediary in the middle. And I think what you're saying is we can do that all over again to the massive prime broking industry, both in traditional markets and in crypto markets, because the hedge fund industry is nascent but growing.
That's right. That's right. It's what I call democratized prime brokerage, and I think that is a reality that we're going to see over the next couple of years.
And so, talk to me about the journey of Figure, because you start off with the securitization, but you're building all sorts of things. So, give me the whole Figure story.
Yeah. So the initial story was predicated on that disruptive concept of taking out 100 plus basis points of cost through asset origination, aggregation, securitization. And by the way,
just to explain to people why 100 basis points is a big deal.
Yeah, so you're in an industry where your gross margin might be between 300 to 500 basis points. So, and that's gross. Your net would be, 1 to 200. So taking 100 basis points of cost out is a massive profit enhancer for you. And by the way, when I started Figure, I reached out to Chris again and told him I had this idea about using blockchain to disrupt the capital markets. And he again told me it was a dumb idea and I shouldn't do it, and it would never amount to anything. And so, I've not listened to him twice. Both times it's been the right thing to do, but I have great respect for him. And so, by the way, Chris pioneered peer-to-peer lending. Like, the Lending Club folks generally get the credit for that, but it was Chris Larson doing all the hard work in the very beginning. And I have a lot of respect for him for doing that. But so the basic premise for us was we wanted to build this disruptive capital ecosystem, and we kind of had to work backwards to, I went to a bunch of banks in 2018 and I tried to convince them, look, if you do asset origination and securitization this way, here's why you're going to save money. Here's how blockchain is going to be effective. And they all said, this is great, Mike. We love it. We'd like to be the 10th bank to do this on blockchain. And so, obviously we had to have a first mover, and as an entrepreneur, you're always trying to de-risk that first mover. And so I said, well, we'll just do it ourselves. I'll just stand up a lender and I'll start lending on chain. And so we did the first loans on chain in 18, did the first securitization of blockchain loans in 20, did the first AAA rated securitizations of blockchain loans in 23. And at this point, we've done, I think, somewhere between 42 and 43 billion of transactions on public chain. And
who's involved in that ecosystem now? How is that working? Because people kind of don't realize that there is parts of the financial system that is using blockchain and has been for a while. So talk through that, because I think it's interesting.
President Donald Trump announced a decisive shift in the U.S. crypto landscape at Miami's FI Priority Summit, declaring an end to what he called Biden's war on Bitcoin and crypto. Speaking to global business leaders and foreign dignitaries, Trump vowed to position America as the undisputed leader in digital currency innovation and to transform the nation into the crypto capital of the world. He pointed to Bitcoin's recent all-time highs and a nearly 10% surge in the Nasdaq as tangible signs of his economic agenda's success. The president emphasized that the end of heavy-handed regulations would usher in a new era of economic growth and financial revitalization. Trump also highlighted his newly established Department of Government Efficiency, DOGE, spearheaded by Elon Musk, which aims to cut wasteful spending and reinvest savings into the economy. He credited Musk's technological expertise for ensuring transparency and efficiency, asserting that billions in savings were being redirected to taxpayers and debt reduction. Criticizing Biden-era policies for stifling innovation and contributing to rampant inflation, Trump painted a stark contrast between his administration's pro-business measures and the previous regime's approach. His pro-crypto rhetoric resonated with attendees, including Saudi officials and tech executives, underscoring his pledge to keep the U.S. at the forefront of global financial innovation.
ETH overbuilt capacity, right? Block space, which is fine because over time, let's say the financial system moves, you get any bank, any hedge fund, any asset manager, they all use Microsoft. Not one uses Apple or Google, right? So this weird way the financial system works, it's like once the decision is made, they do that. It was the same with the IBM mainframes. It's the same in all of this shit. And I have a feeling that it's ETH to lose because it is battle-tested, has the Lindy effect, it has the layer twos, you can spin up a private-ish blockchain but still public. You've got control over the ecosystem, everything there. So I kind of get the idea that, Solana, could that be used for exchanges or Sui? Yeah, sure, because low latency, high TPS. But for the kind of big stuff that you're doing, it feels difficult not to be on ETH.
Yeah, I think that it's a constant debate that we have, and if you look at why we built Provenance blockchain back in 18 and then rebuilt it in 20, it was because at the time what we had was ETH at Ethereum. It wasn't even that it was slow and expensive; it was the predictability, right? It was certainty of being written, and when I lift an offer, I hit a bid I expect to be found. I don't expect to hear that my block wasn't written and come back in 15 minutes. And then the proof of stake networks were coming up, or in Solana's case, proof of history. And the challenge we had there was they were functioning like golden data sets, right? So if I put a loan on a network like that, the loan would go to the validators and be written, and I couldn't let my customer PI information or anything else be exposed to a network that I couldn't control. And what we ended up doing with Provenance is build a structure where it acted as a data validation agent, but not a golden data set. So what goes to when I put a 5 gig loan on Provenance, the 5 gigs goes into an encrypted object store. What goes to the validators is the 256 character hash of that data. And when I trade that loan with you 3 months from now,
so it's sort of like a zero knowledge.
That's right.
Action, right?
And when I trade that loan 3 months from now, it will validate that loan is true. If it's not true, it can't tell you what's wrong with it. But that's okay, right? And so, we opted for that to build into that. And at the time, we were overly focused on TPS because, the reality is when you're trading loans and asset-backed securities, you don't need high TPS.
No, they're single transactions of big size.
I mean, we might do 100 transactions a day on that ecosystem right now, right? So it's not high frequency yet. We certainly want to stand up a TBA market, which would be high frequency, and that'll come out of the guarantor. But so it's if I reference that back to Ethereum, obviously Ethereum going from proof of work to proof of stake was an improvement. I think it is overbuilt. I think it still has a lot of challenges, and I think it's still a hard network for a regulated financial institution to participate in. Now, I think what will be interesting is my guess is JP Morgan will launch JP Coin on Ethereum before the end of the year. And that would be very interesting that they do that.
Ethereum's price is on the rise today thanks to renewed market confidence driven by whale accumulation and fading fears of a chain rollback. Following the recent Bybit hack, the exchange replenished its Ethereum reserves through substantial over-the-counter purchases and emergency transfers from Binance and Bitkit, restoring trust in the platform. Meanwhile, Ethereum core developer Tim Bako dismissed rollback rumors, emphasizing that reversing transactions would cause severe disruptions in decentralized finance and cross-chain bridges, rendering such measures impractical. Large institutional holders have aggressively accumulated around $140 million in Ethereum since the incident, reducing circulating supply and bolstering upward pressure on the token's value. Technical indicators also support the rally, as Ethereum rebounds from a multi-month ascending support trendline that has previously signaled strong buying interest. Investors recall similar accumulation phases in past years that preceded significant price rallies, fueling optimism for further gains. Overall, improved liquidity, diminished regulatory fears, and robust whale activity have combined to drive Ethereum up by over 5% in the last 24 hours. All eyes are now on whether Ethereum can sustain this momentum and break key resistance levels, setting the stage for a broader bullish trend in the crypto market. Investors remain optimistic about Ethereum's future. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.